Hey, good afternoon, folks. Welcome to Money Me. I appreciate you guys being here. If you do me a favor, you can like and subscribe to the channel. I greatly appreciate it. We get to 500 subs. We're going to actually, and someone comments on the video, we're going to give away some Warren Berkshire Hathaway. They give these out to the shareholders when they attend the meeting, and I think it's Charlie Munger and Warren Buffett. But the CPI I want to talk about, Consumer Price Index. Obviously, I mean, they're finally admitting that there's inflation. I think they've been kind of denying it for years as we feel it in our wallet when we're going to buy gas. I mean, gas is up. Here in I'm taping this in Pennsylvania. Here, gas is up to 3.60. That's about the average right now, $3.60. I know out in California, from what I hear, it's up over $5. So obviously, with and you know what's really driving inflation is wages. A lot of places just can't keep help anymore because of COVID and people being out, and to keep the doors open, they're having to raise people's paychecks. I mean, to the point where it's just crazy. And I know, having run a business, and my wife's involved in managing and makes the decision to hire employees and stuff like that, that just wages are just, going through the roof, that to the point where even so, and that's what people don't understand. And I think a lot of the regular employees don't understand, as in wages go up. So yeah, you have to raise the prices of the stuff that you're selling to offset the increase. But that makes it tougher for people. I mean, just alone, I know if you guys go to Dollar Tree just raised up their prices 25%. 25%. And a lot of places are still offering bonuses for people to stay. You know, minimum wage is 7.25 across the country, which is way too low, which I get. But at the same time, um, you got places now they're paying $15 an hour to make burgers. Don't wonder why. Burgers are $10, $12 a piece for a burger, and that hurts. I know myself. I mean, we're paying more. We're truckers are paying more to put the diesel in the truck, which then instead of, let's say, charging $800 to make the delivery, they got to the as much fuel as they use, the price is going to go up. So I'm kind of surprised that the federal government shocked since 1982 that we have a 7% inflation. Let me tell you, a lot of people are feeling more than 7%. So the market, and I'm going to pull it up here. I'm looking at CNBC on another screen. I think the market had a small gain. Let me pull CNBC here. Yeah, the Dow closed up 38.3. Let me share that screen a little bit, so you don't have to just look at my face. So let's share that screen. The Dow closed up 38.3, which is not less than 0.25%. The Nasdaq actually eked out a gain of 35 points, 0.23%. The S&P was up 13 points. I don't know if you guys watched my video I did on Fubu yesterday. I did that early in the morning, but like a lot of stocks that have beaten up, Fubu was up yesterday in the $15 range. So I'm going to pull up my Webull desktop app so I can share that with you guys. If you guys are ever interested in signing up for Webull, I got a link in the description below. You guys can check it out. You get 2 free shares of stock. It doesn't cost you nothing. I get a couple free shares. I actually got last year 3 free stocks when I signed up, and Zigna just got bought out, and I sold it. So Fubu, if you guys watched the video that I did, and Friday we bought another 100 shares in the $13 range. Yesterday it had hit. Let's pull up a daily chart. Yesterday it had a big green candle there yesterday. Yesterday it hit 15. Yesterday, 1539 was the high of the day yesterday. Today, the high of the day was 1558, but it actually closed down. And I had some options. I sold them today. I made an okay profit. I had invested $500 in the options and cashed them out for like $800. So that was okay. And that was my concern, that we had such a big move yesterday, basically a 10% move, that I didn't want to give it back. And I as I predict, I think the market will definitely be down this year. A lot of stocks are already down, but overall, the Dow is really not moved that much, considering where it's at. And I think eventually, once you get some of those, you got a lot of big stocks propping up the market that makes it look like it's artificially high. But a lot of stocks have just been lambasted. You got a lot of stocks near that I follow that are near 52-week. Even let's talk about the FANG stocks. We got Netflix. Netflix is at 537. That was down. It was only down 3 points today, but that was 700. Beginning of November, a lot of this stuff started dropping. 701, now 537. If you guys are you familiar with the FANG stocks? It's Facebook, Apple, Alphabet, Netflix, and hey, Craig, how you doing, sir? And yeah. Is it Google? No, Google is already Alphabet. Let me pull. And like I said, I'm not a licensed professional. Just show you I watch the market every day, do different trades. And are you at work, Craig? Watch it from your phone. Oh, here's a new feature I just realized that you can do. I actually kind of like that because I can go full screen and just put me down in the bottom in the corner there. Now the banner takes away some of that, but so I appreciate everyone that's taken the time to watch. I got some new people coming. I've gained some subscribers the past 2 weeks, so I do appreciate that. And thanks for joining us. But I really think this is going to be a trader's market. I really think there's going to be it's going to be tough to really make new highs when they're talking about raising interest rates 4 times this year, and inflation, and a lot. Honestly, a lot of that money that was being thrown around out there since March, July area of 2020 up until last year. Now stuff got overheated, things went up crazy, and now we're paying the price. Let's see Facebook. What did Facebook? That's Ford Motor. Facebook. Now they call it Meta Platforms. Oh, really? Oh, well, I don't know if that's good news or bad news, Craig. So, but thanks for stopping in. Facebook. Look at here back in September, 385, 333, but it's come a long way. It 244 the beginning of last year, so it's come a long way. Alphabet, Google, even Google. Look at Google. Amazon. Oh, okay. Amazon today. A lot of stocks were up today, but they basically sold off on any news, and they were worried actually the market was going to drop, and I don't see us getting. Like I said, I think we've hit the high in November of 2021, and I think it's going to be a lot of just up and down, but really certain big ones I think eventually are just going to drop. Crazy one. Tesla was surprisingly was up today, but we got oil hitting an all-time. Not all-time high, but we're the last couple of years. Tesla was up today, 42. It was up 4%. And Tesla has the tendency to move up when oil is up. I sold Exxon. I was on that. Look at this. I sold Exxon at around 61, 62. And I'm like, because look, it's been the last couple months, it's kind of just been up and down, up and boy, once it broke above this 66 range, it's hit almost 72 today. So we had 100 shares of it, but oh, I hate when I see that. And it's a shame because I like Exxon. You had an opportunity to buy Exxon just a couple months ago in the 50s, and now already it's 72. But look at that, just straight up. And and this is why I'm being real with you guys and showing you the mistakes or oh well, I could say I sold Exxon at 72. No, I didn't. I sold it. We bought it in the 50s. So we had it a couple times actually in the account, and and that's the thing is there's stocks that we buy, we hold for 2 or 3 years, and then there's stocks we buy and sell. One of the best stocks that last year, and I have to do a video on it, was WGO actually, Winnebago. This stock has had a lot of up and down, and boy, if you catch that 63 to 75, I mean that's done that twice. No, really, in the last 8 months, a lot of these V. Making money today? A little bit. I made money yesterday, Schreiker. Thanks for stopping. I appreciate it. I don't know. I don't know. Are you a mod here? I'm not sure. Hold on. Let me look. Hold on a second. I'll make you a mod here because I do need a couple mods that basically if we get some clowns. I'm going to make you a mod here. I'm going more. All right. So let me mute this. Yeah, you should be a mod now there. So in case we get any clowns, it's been pretty good. I'll be honest. No. This is my moneyme channel. And actually, now that I'm going live, what happened was when I changed some settings on my other channel, I basically took away all mods because there was a lot of comments I had gotten, unfortunately, on a big video, and I don't know what was going on. So I kind of had reset some things. But over here, I don't really go live much, but I am going live much because I am going to focus. I'm going live once a month on my other channel. And then and here I'm going to be going live more, talking about the market and stuff like that. So putting the time in it. I enjoy talking about the market and talking about money. Money is a tough conversation. A lot of times people don't openly want to admit that, they think it's a scam a lot of times and in the market. But really over the long run, that the bank is not going to give you enough money. You need to invest. So but yesterday I did okay. I mean, to be honest, last year was rough. Last year, and the reason it was rough, and I'm gonna share, if you've watched any of my videos, I'm gonna share it with you. The reason that it was rough was simply because I'll show you some, like Fubu. Here's one of the stocks that we got in, and crypto, yeah, but crypto was at, and I don't like crypto. I don't know if you do it or not. Crypto was in the 63,000 range and was down to like 42,000. I mean, that's a big, but here, basically a lot of stocks topped off in November, but basically you had Fubu, and they just announced on Monday that their growth is actually even better. But a lot of these, I don't want to say speculative stocks, but apparently they feel, it dropped from 35 to 13 in roughly 2 months. I mean, that's crazy. And, when that happens and people are on margin, it becomes worse because people are forced to sell more. I mean, look how many more red days you had than green days. One of the, as you guys know, I make a living being a reseller. Poshmark. Look at Poshmark. Now, Poshmark actually was up today, and we do own that, a lot of that. We got that in at around $27 too. But look at this. Look at Poshmark, $27.55. But Poshmark, I'm going to show you something. I had it earlier. Poshmark back in June was 55. We had it already in the 40s, sold a little bit, and when it got back in the 20, some bought some in the 20s, bought some in like 19, 18. But They're having to spend a lot of money for growth, but they're talking that they're going to expand in Europe, so that's good. They have a lot of cash. I think the last cash position was something like $500 million. Their market cap is not that big. Let's see what that now. They don't have they have a 61% hold rating, 38% buy, a strong buy, low target 21, 25, 33. So the average there is about $27. Where honestly, that's not that great. I mean, it was $45. Fubu. Fubu, we bought another 100 shares, sold the Exxon, and got into Fubu. Fubu, I mean, look at it, 28, 36, 50 has a target. I mean, even if you take the average at 35, I mean that's huge from 15 to 35, and I like to see them get bought out. I have a company that just got green lighted for cancer drug and stuff like that. That was up 20% yesterday, but look at the chart on this one. Again, was $10 back in November, was at $5 3 days ago, Friday. That's a 50% haircut. That's rough. Let's look at some big names. Disney was in the 200 range. Let's go back. Disney was 203 back in March last year of this time. 203.02, and it hit 142. You know, if you're dollar cost averaging, it don't matter. You know, I mean, if you're doing mutual funds, like I tell my sons that have 401ks and IRA, buy a steady amount every month, you're actually getting some better prices, and the dollar cost averaging is not, hurting you. But there's two stuff. The Ford's been good lately. Look at Ford. I mean, Ford, 1238 back in August. It hit 24.95. 24.95 on January the 5th. Now, I saw a report. We had I actually still have some Ford options. And saw a report that they're saying the more used cars are coming out, that's going to hurt. And there's a chip delay hurting that. But they're all entering the electric car market and stuff like that. And they're getting more money. They're getting more margins on those cars. Here's some of the stocks that I follow to the left here. Some of them I follow, I never trade. Moderna. I mean, that was just crazy when it all started. Had you gotten the Moderna, you'd be. I mean, look at this. Basically, almost 10 times your money from, September 20th. Well, even further back, $17. Look at Moderna. If someone really took it serious that they that this wasn't just something for a month or so, and they were going to develop a vaccine, but 17 to 500 at one time. But look at now. I mean, now it's back down to 205. Some of the big healthcare companies today took a hit because now the government's saying they got to pay for each person or something like 8 tests a month to have 8 tests. I have not used none. That's expensive. I mean, even at $10 at a wholesale cost, $80 a month for every, and I mean, 8 tests a month, like, geez, like, I don't know. It's just crazy. Baba, I don't like Cheney stocks at all. I've traded Baba, but I don't see myself ever getting involved into it again. I don't know if there's any. Let's see if there's any aftermarket news. Yeah, exactly, Craig. You better get the books out. It's ridiculous. I don't know if there's any movement after the market. I got to be careful how much I show CNBC, that we don't get it's not called a copyright, but I know I follow Just Kevin that does Let me see if there's any aftermarket news. The thing is with me, I pull CNBC, I look at Twitter, I look at Yahoo, Google. There's a lot of things I follow. Sometimes I hate it though, because you can become stubborn, and sometimes you gotta. Some things it always seems like it's obvious. Oh, okay. It's crazy what some companies are doing. Here's a company like here. I'm going to show you the Twitter screen. Then I'll share that with you. Share screen, Twitter. All right. So I do a lot. I watch a lot of stuff on Twitter. So here's a guy that recommends getting into options. Build-A-Bear. Raised revenue outlook for 20 again on January 11th. The range of 408 to 412 million for stuffed bears. Outlook was raised. So basically, their revenue is roughly 10 to 17 million dollars more, and they raised the target from 30 to 33, and 74% is owned by institutional insiders. So let's see what that stock did today. BBY stock, $20. Whoa! So they put a $33. Wow, it's got a cheap PE. Only 9 times earning. Market cap is 321. So now that's piqued my interest. Is that a stock? Maybe I'll do that tomorrow as the stock of the day. So we'll look at it a little bit now, and maybe I'll make a short. I try to keep these videos 10, 12 minutes. Wow, everything's looking pretty good on that too. The chart says bearish, but the performance outlook, short term, medium term, all those arrows are pointing up. 1 year target 30. I like it. Build-A-Bear. I'm gonna make a note. I may do that tomorrow as the stock of the day. Let's look at a chart and see where that's been. And this is all like just off the cuff, so I don't. I read that on Twitter. Now today it had a range of a low of 1894 and a high of 2048, and it closed at 1999. So it didn't have. Let's look at a longer chart. This chart I'm looking at is on stockcharts.com. Wow. It was down. Whoa, was that 95 cents? Holy man, that's had a nice move too. Look at that. I mean, sometimes some things it's like crazy. Oh, it's laughed because I'm a reseller, and Donna always brings a lot of times Build-A-Bear. Heck, sometimes instead of buying Build-A-Bear, I should have bought Build-A-Bear stock. Look at that. 99 cents to 20. 20 times your money. So give you a clue, real quick math. 1,000 into $20,000 in basically a year and a half. Think about that. $5,000 would have been $100,000 just in Build-A-Bear. Geez, I'm going to do that tomorrow. I'm going to do it as the stock of the day. We'll dig into it a little bit more and see what's going on as far as that. So, hey, guys, thanks for everyone that's joining me. I got a bunch of screens going here. Let me share. There's rumors of Dish. So I got a lot of things I'm looking at here as far as the market. I don't know why that's not coming up. Hey, T, how are you doing? Thanks for stopping. So I don't know if you caught what I was saying, T. If you would have put $5,000 into Build-A-Bear last year or 2020, would have $100,000 right now. I'm going to do it as the stock of the day tomorrow. So, but basically, you're talking about consumer price inflation. up 7%. And really what's driving that, and wages is driving that a lot. Wages, as they got to pay the truckers more, as they got to pay the people that work in the warehouse more, as they got to pay people that work in the store more, all that adds up. All that makes it that they have to raise the price of your grocery. I mean, everything across the board. So when like customers come in, like my wife manages a Subway, several Subways for a big gas company. And, people sometimes are coming in because the price of the sandwich went up 20 cents. And the price of food is going up on them because where it's being manufactured, their wages are going up. So they have to pass it along. The Subway employees are making more money. Now's the time, boy, if you want to work. And there's so many places because they're short help and people having off. There's so much overtime and stuff that they're giving out. And it's just crazy. Sometimes I wish I was a little younger, maybe worked at a place, and because what they're paying out is just incredible. So, but I predict the market's probably going to be down. When I say the market, I mean the Dow, the NASDAQ, and S&P is probably going to be down 15% this year. I predict that's what's going to happen. And the reason that's going to happen is because of interest rates going up and inflation. But I do think there'll still be opportunities to trade stocks. But, don't be chasing them. When stocks are up 10, 12, 15% that day, that's not the time to be stepping in and buying stocks. I'm looking at opportunities to short. I mean, I got into a stock today, and look at Microsoft. I got into a stock today only because it's been cut in half, and there's another big channel, and that's the thing, guys. I watch other channels. I'm trying to learn a lot in myself. There's a company called Tattoo Chef that makes it's not meat-based food. It's and the guy that Jeremy on Financial Education Channel. So I got into the 100 shares of that today when I sold out of the position of FUBU options because I cashed in the Turbo Chef. Let me see where it's at. I'm having to punch it in. Hold on a second, guys. Turbo Chef stock. No, is it Turbo Chef? Hold on. It's the only thing doing these alone. It's always like you wish there was a little music or something on in the background, and you're. I wish I could find some other people that would like to come on and enjoy talking about the market. Like my account was up good yesterday. Well, both accounts, but today was down a little bit. But that's all right. We took a position in. Is it called Turbo? Yeah, I thought it was called Turbo Chef. Hold on. No, Tattooed Chef. Excuse me. Tattooed Chef. I apologize. Turbo Chef is the oven. TTCF. Let's pull that up. Here, look at this. $25 in September. A couple days ago, 13. We bought it today. And I'm going to be doing less option. Bought it today at $14.50. So it closed down to 14. So we're down a quarter. No big deal because we're looking at this as long-term, a long-term position. But been investing. Somebody, man, I've made mistakes before in the past that I've seen bigger channels or bigger investors are like, oh, I feel like they hype it up. And then sometimes you just watch a year or two. And that happened with Tesla. I remember thinking, I can't go higher. But they must have I wonder if they just IPO'd. Let's look at the analyst on Webull. Now, the average is 22. But hey, there you go. If we get up to 22, we're talking about a 50% increase. So basically 67% got it rated to buy, 33% there's no sells or no underperforms. Let's look at the profile. Tattoo Chef formerly is a plant-based food company. The company is principally engaged in manufacturing plant-based foods. The company supplies plant-based products to retailers in the United States, ready to go bowls, zucchinis, right? And I've seen the pizzas. And in the frozen section of the retail food stores across the country. There's a lot of things too. I tell you, the restaurant business, I think, is sometimes going to struggle. The strong chains will survive, but a lot of people just are just skeptical, especially the older people, about going out to eat as much and being in crowds. I was listening to CNBC this morning when Jim Cramer was on, and I forget, the not Carl, the Dan. They were talking about basically walking down the streets of Manhattan, and it's quiet. People, because of the cases and that, a lot of people are staying home and they're just not coming out. And it's, in some ways, it seems like it's worse than it was a year and a half ago. But nobody wants to obviously shut down things, because you can't. People have to work. You can't destroy businesses and stuff like that. It's coming at an expense that a lot of businesses, a lot of them are offering to even pay employees sometimes for the week or two that they're home, because they're worried that if they come to work, and because they don't want to lose the money, that they're going to get the whole crew sick, and then you have to close down the business, and then what do you do? So I understand it's a difficult decision. So, all right, guys, that's about a half an hour. I don't want to go any longer than that, because I know that even when the replay, you're not going to get people to watch 30 minutes. Typically, a lot of times you get them to watch 8 to 10 minutes on these. And I do appreciate your support, and help me get to 500. If you guys could share this out, or if you haven't already subscribed, like and subscribe. And I'm going to give these, when we get to 500, I'm going to give these. These were giveaways that they were given out at the Berkshire Hathaway shareholder meetings, and I got a hold of some of these. And like I said, when we get to 1,000 subscribers and the channel is monetized and we have our watch hours, we're actually going to give away some stock. And probably maybe what we'll do is we'll give away like $100 worth of stock, but we'll kind of, if people comment, we'll let you know. Like, we'll make comments, and 2 or 3 people can win, and we'll have the stock, like a stock wheel and stuff like that, sort of like even what Webull does. And I just got to look into what the how it would work to buy stock. I know it can be done, because a lot of people will buy stock for their grandkids and stuff like that, and their kids, and then they put it in the person's legal name and stuff like that. So I'm excited about doing a lot of this channel. I'm doing more on my other channel, and channel's growing. It's a slow grind, and even over here, it's a slow grind. But I do appreciate the support. You guys have a good night, and I'll see you again. And come back tomorrow, because I will have the stock of the day. Tomorrow is going to be Build-A-Bear. So I'll do like a 10-15 minute video on that. And I actually think that that will actually be a personal investment that we will actually take. We even know that it was $1 a year and a half ago. I think it's a good opportunity, and it trades cheap, and could become a good acquisition target even down the road. So we're not going to get a big position, probably $1,000 or $2,000 in one of the accounts where there's maybe some free money. That's the thing I'm learning also, is to honestly, you need to, in a market like this, you need to keep some cash available, so that when opportunities do come up, that you have some available. I wouldn't be 100% in stocks right now. That even if the account is a stock account, I would probably keep a 20% in cash for opportunities. And then when you do make 25-30%, don't be afraid to take it out and let it sit there, and it's going to be a trader's market. It's going to be a trader's market. Again, 401ks, IRAs, that's totally different. That you're investing into a basket of stocks, mutual funds and stuff like that. That's a long-term, you'll be fine and stuff like that. But I'm talking about basically picking stocks and trading stocks and timing it. So give me a thumbs up, and I'll talk to you again. Have a good night.